Hey guys, welcome to the BLIP podcast, where we help agents build successful agencies. I'm your host, Josh Berg, and on this episode, I learned a few things. So, about a month ago, I flew to Kentucky to get some training from Nick Ayers with Made You Look Video Marketing. Well, I wasn't the only agency owner there. I saw some people I've been wanting to connect with for a while, and one of those people I knew of, but I never met in person. And that was Keith Rocha. So I heard Keith a few years back talk about his niche and how he markets to them. And when we were having coffee after the event, I knew I had to have him on to get this info out. So I won't spoil too much of it, but Keith was strategic in his niche, and we'll talk about that. But the main two reasons he decided to get into working with property investors is because the policies are super low maintenance as opposed to something like contractors, and the commissions are some of the highest you can get on property and casualty business. So we've been talking about niching down in our agency and marketing to that niche, but we just haven't gotten around to it yet. Keith really makes me want to pull that trigger. So let's do this. Here's my interview with Keith. Anyone who catches this, thank you so much for listening. Welcome to the BLIP podcast, where we help agents build successful agencies. I'm Josh Berg, and if you're interested in what we're doing, you can check us out at bluelioneinsurancepartners.com, and you can find more information out about our Anti-aggregator. If you have not subscribed to this podcast or YouTube channel or wherever you're listening and you've received some value from it, please subscribe, leave a comment, share it. It really helps us reach more people. So today I've got Keith Rocha on. Keith is with the American Insurance Group in Chattanooga, Tennessee. And we are going to be talking about habitational investment properties, things like that. So Keith, welcome to the show, man.
Josh, thanks for having me on. Looking forward to it.
Yeah. Yes. So I just met Keith for the first time face-to-face down in Kentucky. And anyway,
we were together, some awesome barbecue.
We did. Okay, so let's, first of all, people probably I'll get chastised for this, but I'm not a huge barbecue fan.
Yeah, I don't think the show's going to work. Right now.
There's some, some interference here. I can't really hear you. But yeah, I've had enough of it, and it's okay, but I just don't feel like it's like, for me, it just doesn't, I don't know. It doesn't get me excited.
And where are you from again?
I'm from Washington, from Seattle.
That makes sense.
Yeah. So we get a lot of food up there. But anyway, Keith, welcome to the show again, man. Can you maybe give us a little background history on how you got into insurance in the first place?
Yeah, absolutely. So pretty natural progression. I was working in construction at the time, and that, of course, lends itself to getting into insurance, right? Of course, not at all. I was doing project management and sales for my brother-in-law's company. I'd moved down here just to be close to my girlfriend, now wife at the time, and he needed some help, and so I joined his company, and I knew long term I wanted to do something in sales, and so I spent a year or two looking at different type of sales jobs that are out there, and ran into a buddy of mine back home who owned an insurance agency, and he convinced me to join him as a producer. So I started working for an agency based out of Chicago, but working remotely for him here in Chattanooga. So that's how I got my first start. That was back in 2010. He's an independent agent up in Chicago.
Wow, nice. Chicago's got a special place in my heart. My wife, she'll probably tell you she's from there, although she's from Michigan, but that's where she, a lot of her.
I'd claim Chicago over Michigan too, so makes sense.
Yeah, I was. But she loves it, and I've been there. It's great. But anyway, yeah. So your niche. Why don't you tell us about your niche and what you do and like kind of what your focus is right now?
Yeah, absolutely. So probably 30-40% of our business, and we're trying to grow this segment, is property investors. And that's anything from as small as a single family rental. Now I prefer a large schedule of them versus one location, up to large commercial lesser's risk, apartment complexes, self-storage facilities, and pretty much if you can own it as an investment property, I want it, with the exception, I don't want a trailer park. We don't touch those.
No?
Nope, not interested.
What? Why not? What's the problem with those?
Typically, the type of investor owning them and the type of carriers that want to insure them, it's just not a great space for us.
Yeah,
Now,
gotcha.
if someone has a large portfolio and that they happen to have one, cool, I'll take it. But if their main focus is trailers and trailer parks, no thanks.
Yeah, gotcha. And so how did you start to focus on this? Like, was it intentional? You fall into it like most people? How did it happen?
Yeah, so with this agency, so I started this agency back in 2014, and it was a little bit more planned out getting into this space because of past experience as a producer with my prior agency. And so the first agency I was with, if someone asked me for a quote, didn't care what industry it was. I didn't care if they were an SR22 individual that needed auto insurance or whatever. I was quoting it, and that is not a great way to get started in the insurance industry. Yeah, early on, I thought I had a pretty big win. I had picked up this staffing account. His comp premium was like $85,000. I'm like, dude, I just crushed. But the premium was, like I said, it was $85,000, but the commission percentage was 5%. Oh, and it was paid as earned.
Right.
And so that large premium really wasn't that great of an account. And so I started, as I kind of progressed and started this agency, was intentional about trying to find accounts that are BOP driven and package driven from a premium standpoint, because typically the BOP and the package pays the highest percentage of any line, typically, exception of bonds. And then also those that are not heavy from a service standpoint. So I said this before, I'm not a big fan of contractors. Contractors are very service heavy, typically as much as half or more of the premium on the total account is workers' comp, and you may get 5 on the low end to 11% if you're lucky on the commission on that portion. And I like 15 to 20 to 25% commission on an account more so, and to send one certificate of insurance for the EPI versus one a week for a contractor. So I've done some analysis over the years, because I do have some contractors. I'll give you an example. I had one of my commercial contractors. They spend about $42,000 in commercial premium with us. Not a big count, but decent size. We processed something like 80 or 90 activities on his account over a year period. So a decent amount. His account generated roughly $4,000, a little over that in commission to the agency. Now I've got a individual investor who owns about 35 to 40 single-family rentals. His premium was roughly $30,000 at 15%. Was giving me a decent chunk of commission there, a little bit more than my contractor. We had 3 activities on the account over a year's period. So you imagine from a profitability standpoint, which one do you think was more profitable? And that's been true across the board on the bulk of our investor clients. Now you do have some investors that tend to be more flippers, and I'm not crazy about the flip guys that don't buy and hold. So if I'm working with a flipper, they've got to have a decent buy and hold portfolio, or willing to go on a reporting form policy that I'm not involved in the process of making all the changes. So we'll make some exceptions on that front.
So can you talk about kind of what you just said? Because like the reporting form policy, right? Like what's the difference between that and standalone policies?
Yeah, so I'll give you an example on a flipper. You got a guy who's closing on 2 or 3 properties a month and selling 2 or 3 properties a month. I mean, that's 6 policy changes I'm making if I'm going to do that manually. So I collect all that information, get a new one issued, take it off, and some of our programs that we use are agency build. So then I'm doing not only policy changes, I'm doing accounting transactions then on the back end as well.
Right.
And that is just a massive headache
Yeah.
versus the client getting a piece of mail that they have all their existing locations on that schedule. Okay, here are all the ones you have. If you don't want to continue to insure it, just cross it off and then add any new ones on there. Has the rate on there so they can calculate the premium for any of the new properties. And I don't have to touch that. So they already calculate their final premium, send it in with the policy change form directly to the carrier, and I'm just making annual review changes or sending EPIs if necessary. And that would be for a flipper, or even you'll deal with that with a new home builder as well, that reporting form.
So your clients that have like on the small, like they have a lot of single family rentals, is that how you set them up?
So if they have a lot of single family rentals, I typically consider those a buy and hold guy.
Yeah.
And so they'll be on our just standard program that it's a commercial package policy that has all their locations listed. And if they make any 1 or 2 changes a year, I just process the change. But
Yeah.
for the buy and hold guy who also flips a bunch, I may put his buy and hold in one program and then the flipping portion in that reporting form.
So we don't, and I'm probably going to ask you some questions that you're like, yeah, man, duh. But we don't have any clients that have, well, I mean, shouldn't say any, but we have very few clients that have more than 10 rental properties.
Mhm.
And so when it comes to putting all rental properties on one form, like we just don't do it typically. So
Sure.
my knowledge on that is very minimal. And I think that's probably pretty standard.
Mhm.
But when you have somebody, when you say on a commercial policy like that,
Yep.
like what carriers are you talking about? Like, is it truly a commercial policy, or is it
Oh, it's
like,
truly
how does that
commercial.
work?
Yeah, you've got some carriers that will do. Well, I'll give you auto owners. They're one of our flagship carriers. We may start an investor in auto owners personal lines space because they can do the dwelling fire program. I think it's
Right.
up to 10 rentals, maybe. I can't remember exactly how many on that program. But then
Okay.
at a certain size, the carrier won't do any more on the personal lines. It has to go commercial package, and I could
Yeah.
put, 200 locations on an auto owner's commercial package policy. It also gives you
Wow.
flexibility from a pricing perspective. You can't request pricing on personal lines. It's subject to
Yeah.
their credit score. It's subject to, all of that. Whereas, you can get 20% pricing, 30% pricing on that commercial package. Oh, and I'm getting
Yeah.
20% on the package instead of, 17 or 15 on the dwelling fire. So yeah, I wanted to
That's
go
awesome.
package.
Are there other carriers that do that sort of similar thing, or is auto owners like your go-to?
It depends. Auto owners writes a lot of preferred business.
Right.
So these properties got to be in really, really good shape because auto owners inspects everything.
Yeah.
And so if it's, if it's a little bit of a dirty risk, yeah, I'm not putting it there.
Yeah.
And I don't want to protect my profit sharing. So we do have some other programs that we use that they're a little less stringent on the underwriting,
Yeah.
but can still do large schedules that can do 30, 50, 100, 200 locations.
So, if you have, we have a lot of clients that are, just kind of your standard people, but they might have 3 or 4 rental properties,
Hmm.
and they're hanging on to them, had them for a while, whatever.
Hmm.
At what point, since they're not like a commercial investor
Yeah.
necessarily, like at what point do you make that transition
Yeah. Great
from
question.
individual policies?
So part of our onboarding with a new client who has investment properties is get to know what's their plan moving forward. Are they planning on buying 2, 3, 4, 5 rentals in the next year? Does it make sense to put them on a rental schedule day one because they're going to keep growing, or they just have 2 or 3 because they've had them for the last 5 years? And if that's the case, I'll keep them on a personal lines. Usually 10 is the limit where you have no choice. You got to move them.
Right.
But I've had some as few as 4 or 5 that'll start on a commercial package day one because they're planning on adding a bunch more. And it's just easier, more cost effective to put them on that package day one.
So what is there like, is there like a minimum premium on those package policies, or because I mean, aside, well, to me it seems like a client might it just might be easier for that person if they have 3 or 4 rentals, just have one policy,
Yeah,
it all comes through nice and easy. But is there some additional thing that
the
you're
benefit.
taking? Yeah.
Yeah, so one of the particular programs that we have access to, it comes built in with a pretty sizable umbrella. It comes with a $10 million umbrella built in,
Oh, I
sewer and
see.
drain backup built in at 100,000, 2 years actual loss sustained on business interruption. All these key coverages even comes with 25K of flood coverage unless you're in one of the high risk zones, just built into the base. Whether
Oh,
you have
that's
one
cool.
location or you've got 50, that just comes built in. And so
Nice.
to even try to match anywhere close to that on a personal lines policy or even on a commercial package with another carrier, you'd be so far off from a
Yeah.
pricing perspective.
Yeah.
So
That makes sense.
I've put as few as a single location on that platform because it was a higher net worth individual, and it was just easier to get that $10 million coverage for that one location in that
Yeah.
particular program.
That totally makes sense. I totally get it now. Cool. So how, where do you, how do you acquire all these new customers?
Yeah, great question. So one thing that has been really cool being part of the Insurance Agency Owners Alliance that you and I are in that group. It's caused me to see that's a big need just with other businesses as well. And so being able to collaborate and connect with other business owners, and in our case, insurance agency owners, is a huge benefit. There's so much that we can learn from each other that you can't learn from somebody who doesn't own an insurance agency. And
Right.
so, out of my experience with IAOA, I started connecting some of my real estate investors. Just started off casually getting coffee with 5, 6, 7 of them once a month. I just would connect them just to chat about investing in real estate. And
Yeah.
this last year, we've turned that into a little bit more formal of an event. And so we started uh, inviting non-investor clients to this. And we just had our most recent meeting, and it was a sponsored lunch. We brought in a Rytech, which is a local remediation contractor, to help pay for it. But it was a free event, and the only requirement we had was you had to own investment property. And
Yeah.
so I don't own any, but hey, I'm sponsoring the event, so I
That's
could be there.
right.
My rules. And so we had 33, I think, 34 people that were there, and less than half of them were our clients.
Oh, that's cool,
So
man.
there were then, 17-ish prospects that own anywhere from 4 or 5 rentals to a lady that has a couple hundred of them that were there, and I mean, target rich environment. So now
Totally.
we're starting to do that every other month. Is we're hosting this real estate investors luncheon, and we bring in a speaker, another real estate investor who's got a niche that they do to share their expertise on it. So we've had this last one was on finance, how to finance my investment property. And so my college roommate who invested in quite a bit of real estate, he uses private investors to fund his deals.
Hmm.
I had someone else that was a banker talk about financing a residential investment, and then one of our commercial bankers who also owns commercial property talk about financing a commercial piece of property, and just kind of a platform to get feedback from finance guys. That's obviously a big deal if you're looking at buying property.
Yeah. Right.
How do you fund it?
Right.
And
So
just
how? Oh, go ahead. Go ahead.
I was gonna say just about providing value to that group, and us just kind of um, creating that forum for them to learn from each other.
And how are you getting people that aren't your clients already to that event?
So you're gonna love this. We did some direct mail.
Oh,
Um,
nice.
we sent we pulled from our property assessor people that owned at least 10 residential pieces of property or a decent amount of commercial property, and we sent them an invitation,
Cool.
and we
That's
had
awesome.
quite a bit show up. So
So, are you following up with those people after that event?
absolutely.
Yeah. Nice.
Absolutely.
And so that's one way. Are there any other ways that you're going about attracting new clients?
So now from a online presence, that's one thing that we're starting to do is all of our blog posts now are going to be more geared towards real estate investors.
Okay.
We're just starting on that piece. So we have done some direct mail to the self storage space, and that's worked well. For the niche, the one thing that's interesting with real estate investors, they're hard to cold call. You can't cold call. It's very hard to cold call on a real estate investor because it's not like they just have a storefront you can just walk into, or they have a listed business number. And
Yeah.
this is where some direct mail can be useful, because it's not hard to find their address. If you find the
Right. You
property,
just
you know the mailing address,
yeah,
uh,
yeah.
and then it's just a numbers game.
Nice.
So
Um, yeah. When so you do direct mail, is that event that you do, is that like a monthly thing you're trying to do?
we're doing it every other month now.
Every other month? Nice.
Yep.
Um, are there any other ways you go about getting
And
new business?
business bankers, referrals from clients. We do get now referrals from our investor clients, because the investor space, they know each other. You get some of these wholesale guys, they're not buying anything. They're just
Yeah.
putting it on a contract, flipping it to somebody else. We now are then the referral source for insurance for those guys.
That's
They were
actually a good source because those
a great
guys,
source.
they're not using their own money. They don't actually
Yeah.
typically hold the property, but they're
Yep.
selling it, and like
I,
that person.
yep.
Yeah.
They're basically real
That's
estate
awesome.
agents without a license.
Yeah.
I mean, essentially.
Right. Right. Do you feel so if you're going to start um gearing most of your content, things like that, towards this niche, and it's, 30-35% of your entire agency, are you concerned at all about the I guess the view of your existing clients that aren't in that niche, that like, oh, these guys, this is what they do, they don't really handle our type of stuff? Are you
Yeah.
concerned at all about losing that?
No, not really, because it would not be hard to adjust from a branding perspective of, if I had the American Insurance Group with investor program and a dedicated website to just the investor space, and that's what we'll do eventually, is have some dedicated branding to just that space. Not hard to separate.
Yeah,
There are a lot of agencies that have programs and that brand for the different programs. So no, not concerned about that.
that's cool. I think niching down is something that I feel like it's not necessary, right? There's a ton of generalist agencies out there, but I mean, it seems like the way to go for
Yeah.
me. Like I've talked to enough people, I've figured it out enough, but it's scary. It's scary. At least in my opinion, it's scary because you feel like you're missing out on the higher premium SR22s or all the kind of junk stuff that you
You
may
can
not
have
even
those.
want, right? But
Yeah.
you know what I mean? Like,
Yep.
I mean, if you're a generalist and you have been for a long time and you're like, oh, okay, yeah, it might make sense to start niching down on this thing. It's like, well, I know personally, even though in my head, I know it's a good thing to do, I have some hesitation about it in my
Yeah.
own, you know.
It's not an easy thing because, I mean, most agency owners, we were producers, or many of us were producers at another agency, and we're
Yeah.
sales-driven people. We're either sales-driven or
Yeah.
marketing-driven people. And so when you've got a potential client that's interested in doing business with you, who wants to say no to that?
It's
That's
100%, man.
very unnatural.
Yeah.
And I've had to force myself um, to do that. And it makes sense to do it when you look at the numbers.
Yeah, yeah. It's hard though, and I think you're right. I think like the type of person that an agency owner is typically a motivated, driven
Yeah.
person who loves the kill, right? And
Oh
so
yeah.
like just be like, yeah, I'm just gonna pass on this one. That's tough
Yeah.
to do.
And
Um,
especially early on, the newer the agent, that the harder it is to niche, I think, because
oh yeah,
you need to feed the family,
yeah,
and
for
you're
sure.
you're passing on a piece of business that could mean you put food on the table the next day. That's not easy to do.
What would your advice be on to a newer agent who is like catching this? Like, because and it might be different than mine. Mine would be do what you have to do, write whatever you got to write to start. And then as you have more time and you have more income coming in from renewals and whatnot, now start looking at niching down. That would be my advice. But somebody who's already starting to niche down, you can, you have the information, the numbers. Like, what would you tell somebody?
Yeah, that's an interesting question. Looking back, I don't know, because I don't want to be a one-trick pony as an agency. I don't want to do just real estate investors because I like the diversification.
Yeah.
And so to just do one thing, I don't know that I want to do that as an agency, and I don't know that I would tell somebody to only do one area, because I think the ramp up is harder. And if you don't have the capital sitting in the bank to feed your family and you're relying on the income, that's going to be tough. But it doesn't mean you can't be picky. What you should be proactive going after is what you want long term. If something else comes in the door, dental office, and that's not your niche, and it's easy to write, you got direct markets to write it, hey, write the piece of business.
Right.
But what you should be proactive is what in targeting, what your marketing should be going after is your niche. I would not market outside of your niche. Doesn't make sense.
Yeah. How's your agency set up? Do you have split producer CSR roles? What's it look like?
Yeah, great question. So as an agency right now, from a staffing standpoint, I've got a business partner that handles the bulk of the operations side of the business and also does a great bit of production himself. He doesn't actually write business, but we'll generate the lead and then hand that to our commercial producer. We have a dedicated service team. I want my producer focused on closing business, not generating an evidence of insurance, not
right.
processing a basic policy change. And then it is broken down to our commercial service team and our personal lines service team.
So you have commercial producer, commercial service, and personal service and sales?
Correct. Now,
So
our producer on the commercial side will still close some personal lines accounts, just because we don't have a dedicated full-time personal lines producer, but it's not something that we actively target. So he'll handle it as the lead comes in, but we're not marketing for that space.
How's that? So there is some sort of handoff from producer to the service team after the sale. What does that look like? And have you had any sort of pushback from those clients that are in that transition? And I ask that because it's something that we've been kicking around, that idea, because right now everyone in our agency basically services and sells, and so they sell a client. That client continues to reach out to them first for service down the road, and I like that. I mean, you're somebody who does service and sales is probably not going to be that sort of like killer sales producer that you really want to attract. So can you talk about that?
Yeah, absolutely. So I look at it as there are two main types of people that you need in the insurance space. You got to have the hunter and you got to have the farmer. My service team is the farmer. They're great at developing the long-term relationships. They can't stand when we lose an account. It hurts them to lose an account.
Yeah.
My producer, I want him to make the kill, throw it over the fence, and go get the next one. I don't have to worry about him, sowing and reaping and watering. None of that. He needs to produce. And so it is a little bit of a transition, a tough transition, to go from producer and service to the two separate spaces. I dealt with that because when I started my agency, it was just me for the first 6 months, and then brought on my first team member who was on the service side. And a lot of the clients that followed me to my agency were used to just dealing with Keith Rocha. My prior agency, I was producer and service. So they'd call my cell phone, hey, I bought a new vehicle. And so that transition was harder than what it is today. Today it's easy because we talk about it on the front end as part of the sales process of, hey, we've got a dedicated service team. Hey, I'm not always in the office. I'm at meetings. I'm with other clients. I'm sometimes busy. I can't be there all the time, but we've got a dedicated service team for you. And here's this individual. We've got in our proposal pictures and the names of our service team members of who our clients will be dealing with on an ongoing basis.
Oh,
And
that's
then
cool.
as part of our onboarding process, they interact with our service team the moment they become a client. Our producer doesn't send out the applications to be e-signed. Our service team does. So they handle the processing. And then when a policy gets issued, our producer doesn't send a confirmation of coverage. Our service team does. And so they're interacting day one with the service team. It's not something I have to introduce later. And so it's just part of our process. So now it works really, really well. And if a service request happens to come into my personal email or our producer's email, he just forwards it to our service team. And we have a single service inbox. It's just service@insurancegroup.us, and that's where all the service requests go.
Nice. So you would say segmenting those
100%.
is probably the best way to handle it.
100%.
And do you think it's that commercial is different than the personal lines in that? Like, would you also say segment the personal lines?
I would say segment the personal lines, with the exception of having somebody that can do some selling at renewal time. That's the perfect time to cross-sell, upsell, and so we have a new individual starting next week that's going to be that kind of personal lines, a little bit of service, but a lot of sales to handle the cross-selling, because your own book is the easiest book to sell to. They're already doing business with you. Why not pick up the rest of the lines? And so that type of producer I like in that role. But for the most part, I would still segment service and sales, even on personal lines.
Do you guys have two questions. First, do you guys use a special software for your proposals, or is it something you created in-house?
Well, actually, Nick Ayers and I collaborated on a proposal for IAOA a couple years ago, and that's predominantly what we use for our commercial presentations.
How long does that take you to fill out?
Not very long, because it's not a ton of the detail. It's more high level, and so we'll include kind of that high level discussion sometimes with then some of the carrier proposals with a lot of the minutia. They don't. Clients, for the most part, they don't care about the policy form you're using. They just don't care about the minutia. And occasionally you get somebody who does, and I can provide them more detail. Very few of them want to see the policy specimen prior to issuance. I think I've had that request like twice.
And you're like, probably not my type of client.
No, actually, I love that type of client, because if they're a little bit more painful to pick up and they care about quality of coverage, most agents and agencies are not selling on quality of coverage. They're selling on price. So I love the guy that chooses me because we've got the best coverage.
Yeah, true. I can see that. How long, if you have a client that has 100 single family rentals, how long does that take you to set up if you put it on one form?
Actually, not as long as you think. In that case, we would have an Excel spreadsheet that we'd send to our program administrator, and then they would code it for us.
Oh, really?
So that could be knocked out. And we do use we have a virtual assistant as well. We do help with some data entry. So that would be depending on how we got the info from the client. A lot of our investor clients, they have their entire portfolio already listed out with all the addresses, year construction, a lot of that information already handy in an Excel spreadsheet. So sometimes it's just a matter of moving the cells around to get into the format that our carrier wants, and then we just forward it on. So that can be done in a day.
Are those policies, do those work if somebody has mortgages on those properties, or does it only work for cash? It does.
Yep.
So does it work if the mortgage pays the premium?
Yep.
Or if
yes, it's just a headache from our accounting standpoint, because then I'm having to send a separate mortgagee bill and then collect that separate premium for that particular location.
Yeah.
We do it. It's a headache, but hey, for 100 properties, all day.
Heck yeah, man. Heck yeah.
Because if you think about it from an activity standpoint, let's say that guy has 100 properties and he's a buy and hold guy. That might be my only activity on my account for the year is sending the mortgagee bill, sending an
Yeah.
API, and collecting the premium. And it
Yeah.
just sits there.
Nice. So what, do you have a book recommendation? What's your go-to or something you're reading now?
Well, so I was thinking about that question a little bit earlier. I love listening to books. I use Audible. I got a lot of FaceTime and windshield time in the car, so I love to use Audible for that. And as I was thinking about it, probably the book that had the most impact on my business getting started was a book called The E-Myth, and E-Myth Revisited. And the reason why I say that book is because it helped me from day one build a business, not just a job that I own.
Right.
And a lot of agencies have the tendency to just own their own job.
Yep.
They do everything in the or not everything, but most things in the agency. Whereas I wanted to build a business, not just the job that I own. And the E-Myth helped me kind of see that before I even started the agency.
Did you start documenting your processes kind of at the start, even when it was just you?
No, not at all.
Not yet. No.
I needed cash.
Yeah, right.
And the process has slowed me down.
Nice. Cool. Well, where can people find you if they have more questions?
Yeah, you can find me. I mean, if you're an insurance agent, you can find me in IAOA. If you're an agency owner, you better be in there.
That's right.
But I mean, you can call me on my cell, 423-443-1211. Happy to give that out, or shoot me an email, keith@insurancegroup.us.
Nice. Love it, man. Cell phone. Wow.
Absolutely.
But only calls after 9 p.m. and before 6 a.m.
Well,
right?
like no, I don't care when you call me, because like I said earlier before we got on the video, my phone's
That's
always
right.
on silent. You would end up leaving me a message, and I'd listen to it, see if I was going to call you back. No, I'd call you
Love
back.
it. Love it. Nice. Well, Keith, thank you so much, man, for being on here. I appreciate it.
No, thank you.
That's some valuable information. So yeah, everyone, thanks for watching. Thanks for listening. And we'll be here again next week.